really is to help all of our insured customers in our 5-state area with any concerns or issues they have with their flood insurance. Thank you.
Thanks, Gil. Michelle?
Sure. I'm Michelle Salzberg. I'm a shareholder at the law firm of Baker Donaldson. I'm located in Orlando, Florida, and my practice is primarily in the area of disaster recovery. So I typically assist local governments, private nonprofits, state governments with obtaining FEMA reimbursement, and I work in other federal funding programs as well.
Thanks, Michelle. Patty?
Hi, everybody. I'm Patty McMurray, and it's been my pleasure to represent the Louisiana Realtors for more than 20 years. I'm a shareholder with Baker Donaldson. I'm in the Baton Rouge office. And I also, besides representing the Louisiana Realtors, do a lot of real estate work.
Thanks, Patty. And our state partner is the Louisiana Department of Transportation and Development Floodplain Office. So Pam Lightfoot, do you want to say hi?
Hi, it's me. I work in the state Nfip coordinator's office here in Baton Rouge. Any floodplain management questions, y'all can just give me a call.
Awesome. Thanks, Pam. So if you have comments or questions, please type those into the chat, and all of the presenters plus Pam will be able to respond to those at the end of the presentation. So Gil, tell us about the NFIP.
Okay, so I absolutely love this slide. This analogy, I think, fits perfect to try to explain it. So we have the National Flood Insurance Program as a whole. But what most people don't understand is there's different branches within the NFIP, and this three-legged stool is a representation of what those branches do. First thing we have to do is we have to identify where the risk is. So hazard identification, our risk analysis branch, they work with technical partners, they work with community engineers, and what they do is they map areas. Before we used to map individual cities, but we found out what cities outside of that jurisdiction were doing were impacting the city. Same thing when we started mapping counties, things happening outside the county was impacting things inside. So we do whole watershed studies now to incorporate the true risk of the entire areas. It's a daunting task. Mapping can take 2 to 5 years, depending on the amount of appeals, but it's something that is definitely needed to help identify the risk. Now we move into mitigation. We have to we take the information given us to by the engineers, and then we have to take action on this. We have to get it to where communities will use this information to better protect their citizens. And mitigation comes in the form of regulations. So in order to participate in the National Flood Insurance Program, it's a voluntary program, but it's a quid pro quo program, something for something. So in this regard, the community is afforded affordable flood insurance and access to additional grant monies. In return, they have to enforce, they have to agree to adopt and enforce floodplain development ordinances or regulations. Now, those are important because as real estate professionals, if these ordinance and the requirements under this ordinance are not applied to, there's a possibility of structures being what we call non-compliant. And that could be a big thing if they're current owners or flippers are trying to sell houses that are not compliant and it's not known to potential buyers. It could be a really big eye opener later on after closing when they find out that they're not compliant and they have to be brought into full compliance of current floodplain regulations. Now, the last leg is flood insurance. This is the best way to protect any type of investment, either your primary residence, either your camp down there. I know people like their camps in Louisiana, secondary homes, rental homes. By having a flood insurance policy, we help them to recover from disasters faster and with less emotional or physical strain on them. Flooding is a major event. It's emotional. It's something that people have a hard time after recovering, especially if they don't have the means in which to rebuild. Having a flood insurance policy is a way for them to get back into their way of life faster and to provide just that level of protection. Just remember, 1 inch of water can cost up to $26,000 in damage. And a couple other presentations we have found that nationwide, most emergency funds are less than $5,000. So without flood insurance, most people are unable to just take the cost and rebuild on their own without some type of assistance. So when all three of those legs work together, we got a very stable stool. And that's important because without working together, it's not so stable and maybe some things would fall through the cracks. And what we don't want is we want a proper house under the regulations, and we want them to be able to have affordable flood insurance. And by following the flood damage preventive ordinance would lead to lower flood insurance premiums. And the opposite applies as well. If the regulations are not followed, it can lead to higher flood insurance costs. So that's kind of it in a nutshell. I know that's a lot of information quickly, but it's just kind of designed to open your eyes and understand how the NFIP works and how important each leg is to real estate professionals.
Thanks, Gil. And as you'll see when we go through questions on the disclosure, some of the questions are going to hit on different legs of this stool. So now let's talk about the flood insurance requirement. So almost all of you, I'm sure, are aware of the mandatory purchase flood insurance requirement. If someone is getting a federally backed loan or mortgage in the high risk flood area, they're going to have flood insurance, through their lender. So this requirement is different, but kind of the same premise applies. So this is a flood insurance requirement after federal disaster assistance. And that same the same idea is that if the federal government is putting money into, repairing your home, replacing your items, you're in a known high risk area, they are going to require you to get and keep flood insurance on that structure. So this map that you see over to the right, this is kind of showing, concentrations of the obtain and maintain flood insurance requirement on the different parishes for Louisiana. So the darker the color, the more amount of structures with this requirement. So those darker colors, we're looking at Orleans Parish, Jefferson Parish, Livingston, kind of the highest colors. But you can see it's also spread throughout the whole state. So that means that someone has received federal disaster assistance for a flood event. They live in the high risk flood area, and now they have to get and keep flood insurance. If they don't, they can be ineligible for certain types of future disaster assistance in a flood event. That would be things like repair and replacement costs. So you can see, we're estimating that over 150,000 addresses have this obtain and maintain requirement. So it's very important that buyers are getting flood insurance and that sellers are notifying people of this requirement, because the requirement actually stays with the address. When I transfer the property, that requirement to get and keep flood insurance now becomes the requirement of that new owner. So I kind of think of the obtain and maintain flood insurance requirement as a big umbrella. Now within that big umbrella, there's a smaller set of people who can qualify for a group flood insurance policy. What is a group flood insurance policy? So it's a 3-year national flood insurance policy. Right now it covers those policyholders for about $72,000 in coverage. Who would be eligible to get one of these group flood insurance policies? Essentially, this is going to people that either didn't have to or they weren't eligible for an SBA loan. So in essence, these are kind of going to our, sometimes our lowest income applicants. So it's amazing that they are able to be covered by flood insurance for 3 years. If they're an owner and they sell that property, you can transfer the group flood insurance to the next owner, but after that 3 years ends, you can't renew the group flood insurance policy. What we need people to do is to purchase a flood insurance policy on their own. And you can see that the last big batch of these, if you have heard about these before, it was probably from the 2016 flooding. I estimate about 7,000 of these policies, and they would have expired in 2019. After the 2020 hurricanes, It looks like we have about 100 of these policies right now. And I see there's questions coming in, so I'll address that in the chat, but I'm going to move on. Gil, why don't you tell us more about the requirements?
Okay, so obtain and maintain after disaster. What does that mean? Well, after you have received disaster assistance, the obligation to obtain and maintain means that you have to maintain a flood insurance policy. It could be up for the amount you receive for disaster assistance, or depending on your lenders, it could be for the amount of the loan or the valuation of the home. But flood insurance coverage must be maintained at the address of the home, even if damaged building is replaced by a new one. And this is important to remember. This next criteria is it doesn't follow the owners. The obligation to obtain and maintain stays with the location, stays with that house. So even if a survivor does get disaster assistance and they sell that house, they are required to inform the new owners that there is an obligation to obtain and maintain for that property. And it's important that this happens because, once again, we don't want people to think that they can apply for a disaster assistance after an event happens and they're going to be denied. And we have been doing this. We don't like it. And also it could be used against, in order for a disaster to be declared, they have to be a certain dollar amount. While when you have an obligation to obtain and maintain and you don't maintain insurance, the damages to your structure are not part of the damage assessment needed to reach a declaration. So it's important to remember. Now, also renters, it's so important that they get a content only policy. Now, if they do have one, or they have obligation to obtain and maintain, it's very simple. They have to maintain flood insurance as long as they live in that same apartment. Now, if they do move to a different apartment, the obligation to maintain flood insurance does drop off. But if they remain in that same apartment, they have to maintain it. And it's really important. Now, remember, content is a big thing for me. People just underestimate the cost of replacing contents. If you just take your house, turn it upside down and shake it, right? Everything that falls out is your content, your TVs, your couches, all your appliances, all those are your content. And if you don't have content coverage, you're going to be footing the bill to replace those all on your own. And for renters, that's their only way of providing some level of protection. So obtain and maintain for disaster assistance is imperative that it's passed on to any new owners, that it stays with the building, not the owner.
Thanks, Gil. And so just a few more points before we hand it over to Michelle and Patty. So how much flood insurance would you be required to keep for this federal disaster assistance? You'll need to get an amount equal to that assistance that was received. So if I received $6,000 in, federal disaster assistance, I would need to get an amount of Nfip coverage or other flood insurance coverage that's equal to that amount of assistance. And, a question you guys are probably all wondering is, hey, how can I find out if a property has this obtain and maintain requirement? So we would love if there was a public database where you could just go and type in and see, does this address have the requirement? Unfortunately, due to privacy constraints, we do not have that. So what we recommend, for the requirement, the duty is on that person that receives the assistance to notify the next owner. So it is important. If you don't know, if you can't tell, you're going to want to get flood insurance to cover yourself, to make sure. And let's remember, we're talking about structures that are in the high risk flood area anyway. So you want to have flood insurance on these properties anyhow. I'm going to pass it to Michelle and Patty now.
Hey everyone. So we've already kind of covered what the obtain and maintain requirement is, but I'm going to break it down a little bit further and talk a little bit about that transfer notice requirement as well. So as Gil and Rebecca have already explained, the obtain and maintain requirement applies if a property owner, and I'm talking about owners here in the FEMA context, although the obtain and maintain requirement will apply to renters as well, and also to other forms of federal funding. But for purposes of this discussion, it's really in the context of FEMA assistance for property owners. So if a property owner receives federal financial assistance for a flood loss and the property is in a special flood hazard area, and insurable under the NFIP program, then the obtain and maintain requirement applies. So special flood hazard area is those flood zones that are in A or V zones, and the community has to be a part of the NFIP program, then the requirement applies. So the owner then must obtain flood insurance for the property to receive the assistance and is expected to continually maintain that insurance regardless of a change in ownership. Rebecca, next slide. So what happens if you fail to obtain them or maintain the insurance? A couple things can happen. First of all, you are ineligible for future assistance for real or personal property damaged by flood. In the individual assistance context, FEMA limits this sort of punitive result to flood assistance. So you still may be eligible for other assistance, so items not damaged by flood or items that couldn't have been insured. And then we'll talk a little bit about the transfer requirement and what it might mean if you fail to notify. I think that's the next slide. As Rebecca noted, the requirement to obtain insurance can be fulfilled through private insurance, through an NFIP policy, and the amount of assistance must be equal to what the individual received in individual assistance. So it really only applies to the real and personal property that can be insured under NFIP. So if you receive more assistance than is insurable, your insurance requirement is obviously going to be limited to only those things that insurance is available for. FEMA doesn't expect you to insure the uninsurable. Next slide. So we talked a little bit about the notice requirement, and that is because the obtain and maintain requirement stays with the address, there is a regulatory requirement that the seller of a property must notify the buyer of this requirement. So we kind of have it broken down into who, what, when, where, and why. Who does the notice requirement apply to? The seller. And what must they do is inform the transferee of the requirement to obtain and maintain. This has to be done on or before the date of the property transfer, and the requirement is that the notification be contained in the documents evidencing the transfer of ownership of the property, which I understand in Louisiana is the act of sale. And Patty can speak more to that. And we talked a little bit about sort of like the result of failing to obtain and maintain would be that you are ineligible for future disaster assistance. But technically speaking, there's other consequences as well. One of them is that if the property is damaged in a subsequent disaster, FEMA can seek reimbursement from the seller for any disaster assistance that it decides to award to the buyer. So in all likelihood, practically speaking, what would likely happen is FEMA would not award disaster assistance to a buyer who failed to obtain and maintain, but it could, and in that case, it can go after the seller then for reimbursement of that assistance. You know, I think in practice, that would be very difficult to do, and what's more likely is that FEMA just won't give the buyer disaster assistance because the obtain and maintain requirement has not been met. So, you know, something to be aware of, that there is sort of this extra layer of liability that looms over the seller if they fail to not only obtain and maintain, but also to notify of a transferee of the requirement. And I think Patty, the next slide is yours.
Okay. So we've talked about the seller has the duty to pass along this requirement of obtaining and maintaining the flood insurance, But how actually do you do that in a transaction? So you need to have it in two places. First, it should be in your purchase agreement. It is not in the required purchase agreement form because of course it doesn't apply to everybody, but we have done an addendum to that form as an example of how you could pass along that requirement in the purchase agreement. This addendum is an example of them. There's 3 different versions that we've done, laid out in different ways, but they all have the same information, some of which allow you to not put in the number as far as the amount of assistance actually received by the seller or a previous seller, because you may not know that. All of these would be compliant with the requirement to pass along that obtain and maintain notice. And then it also says in these addendums, it notifies the title attorney when they're doing the documents to close the sale that this obtain and maintain requirement needs to be in the active sale as well. So 2 places it needs to be. First, in the purchase agreement so that your buyer's aware of it, you've disclosed it. And secondly, in the active sale. And then we're going to talk about a third one, which is questions on your property disclosure document that also asks for some of this information. So we can go to the next slide.
Thank you, Patty and Michelle. And just before we move on, just to clear up a few things. So I do want to make sure that everyone understands for, hey, when we're talking about FEMA's individual assistance, those dollars to those, homeowners, to those renters, this flood insurance requirement to obtain and maintain, this is when your structure is in the high risk flood area. So those are zones A and zones V. If you guys know, the flood maps do change, they can change. So potentially a structure could be mapped into the high risk flood area for one flood event. It could have this obtain and maintain requirement. By a couple years later, potentially the maps could have changed and this home could now be mapped into a lower risk flood zone, like a shaded zone X or a zone X. If that owner goes to apply for FEMA disaster assistance, they will look at that address, they will see which flood zone it's in, and that obtain and maintain requirement would not be required on those homes that are now not in the high risk area. So I just want to make sure everyone understands that. And then also kudos to Louisiana for creating something like this form. I haven't seen this in any of our other Region 6 states. We have 5 states in our area, and I haven't heard about it anywhere across the country. Any ways that we can help make people aware of this, I think is really important. So kudos to you guys for doing this, and please use this form.
And someone just asked about where the forms are available. The forms are available on LR's website. If you go to the section on legal lines and you search obtain and maintain, you'll pull up a lot of information, which will include these sample forms, which are in a Word format, and you can take and use as you would like. And you can also, if you don't want to use the forms, as you all know, there's a section in the required mandatory contract that allows you to add in additional information, and you can come up with your own disclosure and put in that section of the form as well, the purchase agreement. Okay, you want to go to the next one? All right, so the other place that is a good information section to include is, of course, our property disclosure document, which needs to be filled out by the seller in all residential transactions. And one more thing on the purchase agreement addendum that I didn't mention, this is commercial and this is residential. This is not just residential. Now, a property disclosure document is only required for residential transactions, but we're all aware of this, and this is supposed to be information from the seller And so make sure as you're going through this that it is the seller providing this information. We can go on to the next one. And it is to the best of the seller's knowledge and belief. And sometimes the seller may not know about what previous owners may have received as far as any type of assistance or flooding. But this is a case too where over disclosure on potential flooding is the way to go versus under disclosure. And let's go on to the next one. And not everyone, not all sellers, there's some that are exempt from having to fill out this form. But the question we've gotten multiple times is, if I don't have to fill out a property disclosure form, does that mean that I am exempt from having to do this pass along, obtain, and maintain? No, it does not. So even if you're not required as a seller to fill this out as a property disclosure form, you are not released from the obtain and maintain pass along requirement. Let's go to the next one. And so here is the questions, and I think Gil's taking over from here, talking about flood disclosure within our property disclosure document.
Yes. So let's talk a little bit about some of the questions on the disclosures. Make sure that the verbiage and the terminology is pretty clear. So in this one, we are talking about the property itself. Now, in FEMA's eyes, what's important to us is structures. We normally don't, I won't say not care, but it's not our primary purpose. We don't insure land, but it will have an impact. Remember the three-legged stool. We do have mitigation, and the ordinance has to be applied to it. So when we do have land, we have to be careful for future development. Now, that's really important on real estate professionals, because when you have open lots, it's going to be harder to sell those if there is a higher standard that has to be adhered to in order for something to be built in. So it's important to remember, the question asks, has any flooding, water intrusion, accumulation, or drainage problem been experienced with respect to the land? And that's important. Areas that have shallow flooding or ponding, all that can have an impact, because when you build an area such as this, especially in areas of high flood risk, that water has to go someplace else. If you're allowed to bring fill in and elevate the lowest floor elevation based on fill, that water is going to go someplace else, and you could open up to a negative impact on your surrounding houses. So that's not a way to introduce yourself to the neighbors. And one of the things you can do about that is the buyer can request the flood loss history. Now, once again, this is for the property itself, but if there is a structure on that property at one point and it had been insured under the NFIP, the owner can request a flood loss history. And actually, the owner receives, if they have an active flood insurance policy, upon the renewal, they'd receive a flood loss history report. So that report right there is really important when we come to real estate. Once again, our reports go off of the structure. So the house could have changed hands multiple times, but we keep track of the number of claims from the time that they started their flood insurance policy all the way up until they continuously keep it, or do they let it lapse? Next slide, please. Okay, so this one asks for the property flood zone. Now, this is really important as real estate professionals. You understand what the zones are. We do have some older terms out there. Right now, predominantly what you see are zones A or zones AE. You see zones V or VE. You may see a zone AO or AH in there in specialized or in unique circumstances. But we do have some older maps out there that still require us to use old verbiage. For example, you may see an A with a number next to it. It could be a number 1 through 30. That means there is an elevation in that area. It's just based on older data. And for some reason, that area has not been included in revised maps. The state is the one who dictates where maps are going to be revised in conjunction with FEMA. But sometimes some communities with very low population density or very little growth, may have to wait many years to have a new map done, while areas that have a fast development rate and fast population growth can get remapped every 5 or 6 years. It just depends on those circumstances, okay? But note that the land could be in multiple flood zones, and that's really important because the most restrictive floodplain regulations are going to apply. So if you have a parcel that has VE and A zones, any development that touches the VE zone is going to require V zone requirements. And that's really restrictive because in V zones, you're not allowed to have slab on grade type foundations. You're not allowed to bring in structural fill, because that could really change someone's plans if they buy a parcel that has multiple flood zones. And ultimately the community can encourage, and we do encourage the community to adopt higher standards. So that could have a big impact on that as well. If a buyer wants to develop, and oh, there we go. Thank you, Rebecca. So moving on to the next questions, 10 and 11. Age. In general, the older structure, the more likely it does not meet current building floor plan and codes. We call those pre-firm. It's really not the homeowner's fault that they built a home before regulations were in place. We allow them certain types of grandfathering and pre-firm structures, but eventually these older homes are going to be at a disadvantage because they do not meet current regulation standards. Often the case, they're below the basement elevations. Well, those are going to be our most concerns because they're going to flood, and they're going to flood multiple times. We call that the flood, the perpetual cycle of flood, rinse, repeat. The only way to really break that cycle is substantial improvement or substantial damage, which is very political because it does require houses to be brought to full compliance if they meet the criteria for substantial improvement, which is any improvement that exceeds 50% of fair market value at the time of the improvement, or substantial damage, which is 50% of damage by any means at the fair market price. So when I say any means, it could be a tornado, it could be a flood, it could be someone lose control of their car and they just take out the entire lower floor of a house. But if repairing that costs 50% or more, substantial damage would have to be applied to that home. And that's really important to remember, because once again, if the home is not brought into full compliance, it's going to be rated post-firm construction, going to be considered a non-compliant structure, but rated post-firm. That means full risk rate right off the bat for flood insurance. It could be very, very expensive. And question number 11, alterations and permits and inspections. That's really important because any type of development, and our development definition is very broad for FEMA, 44 CFR 59.1 has the definition of development very comprehensive. It can include mining, dredging, grading, excavating. It can include the storage of materials as well as major repairs for houses. If those permits are not applied for, once again, non-compliant structure. So we're starting to see how those three legs work together. The mappers identify the risk, and then mitigation. They're the ones who help the community enforce regulations. I say help because we do not have land use authority in local jurisdictions, okay? The community are the ones who adopted the ordinance and put it into local law. So they are the ones who have land use authority. But what we did do is give them a model ordinance that they can base off of, but they can make it more stringent. They just can't make it any less. So they adopted that, and now we help them make sure that they're in full compliance. Because as I mentioned earlier, it's a voluntary program and they have agreed to adopt and enforce. But if they are not enforcing the regulations, they're putting their participation in the Nfip in jeopardy. First, it will be probation, which means there's a $50 surcharge added on every policy in their jurisdictional boundaries. And if situations are not corrected, it can lead to suspension. And as most of you are aware, federal dollars touch a lot of mortgages out there: Fannie Mae's, Fannie Mac's, VA's, HUD's. Suspension means that flood insurance is no longer available in that community. That means one of two things. They're going to have to find a private product that mirrors NFIP requirements, or they're going to have to pay off their loan. I don't know about you. I can't afford to pay off my loan. So it's imperative that the community stays in good standing. Next slide, please. Okay, moving on to structure question 14. Going to want to see an explanation. Has any structure of the property ever flooded by rising water or otherwise? This is so important because if a property has flooded once, more than likely it can flood again. Now, we do know there may be some special circumstances out there. I'll throw Texas, for example, had 52 inches of rainfall in conjunction with the Harvey, when Hurricane Harvey made landfall. The hurricane itself caused significant damage, but that the rainfall at 52 inches just went above and beyond and flooded a lot more structures and led to more flooding due to release of reservoirs. By understanding if this house is flooded before can help you understand the risk this house is at. Is it elevated? Is it slab on grade foundation? Can it be elevated? What's the cost associated with that? Is it being rated pre-firm now? Is the community have any verbiage in their ordinance about repetitive loss? The thing about repetitive loss is once you're on that list, you're on it for good unless you mitigate that house specifically. And a repetitive loss is defined as any two claims of over $1,000 each. So just imagine your air conditioner condensers on the outside. They're on a slab lower than the lowest floor slab. So just two claims on those and you're on a repetitive loss list. That means additional percentage increases on your flood insurance costs, and you're on a list that the house has to be brought into compliance at one point or the other. So it's really important that these are understood by the real estate professionals so they can guide potential clients if these questions are answered yes. If it did flood, what was the high water mark? How high did it get in that house? And also, was it properly repaired? If a flood insurance policy was in place when it flooded, was it repaired properly? Because FEMA will not duplicate payments. What that means, if they were paid, the original homeowners were paid to replace cabinets, and all they decided to do was clean them out, our reports have all this information documented. We have pictures. We have very detailed pictures from our adjusters. And then if another claim happens, our adjusters compare from the first flooding event to the second. And believe it or not, cabinets are actually easy to recognize. A lot of the wood in there has very identifiable characteristics. And they'll simply do a partial denial. Any new damage will be paid out, but any existing damage that was not repaired will get a denial. So it's important to have these questions answered. Next slide, please. Okay. Is there flood insurance on the property? You notice if it doesn't say, is there Nfip flood insurance? It says, is there flood insurance? And now this is important because there's a big boom in the private sector, and that's great. You know, to me, it doesn't matter if a client of yours is insured through the Nfip or a private sector. I just want them to have a level of coverage in which to help them rebuild. But at the same time, ask them for a copy of the declaration page because it's imperative to understand what coverage is provided under this policy. A lot of people don't understand that under a standard flood insurance policy, you would have to get a building and a content. Now you can roll those under one contract, right? But they're two different policies. Now, if you have a preferred risk policies, that's the only product we have that rolls them into one, but those are only available outside of FEMA identified special flood hazard areas, right? But the thing about the declaration page is important because it talks about the coverage. Remember, we talked about under the obligation, obtain and maintain that you have to have coverage to equal the amount of the assistance provided. Well, there could be additional requirements from the lender. That requirement could be the amount of the loan or the valuation of the home, whichever one is more advantageous to the homeowner. So it's important that the coverage be where it needs to be by the homeowner. Now, if there is no obligation under the lenders and the disaster assistance was menial, it's between $5,000 to $6,000, you can always bump that level of coverage up to what is affordable by that homeowner. Now, that's really important because a lot of insurance agents will go for straight maximum coverage. You need $250,000. Well, do they really need $250,000 when the house is only valued at $175,000? Because let me tell you a secret, we are not going to pay $250,000 replacement cost value for a home valued at $175,000. They are going to receive $175,000. So it makes no sense to be overinsured while in the NFIP. And also identifies the policy. That's really important because if you're outside of the special flood hazard area, it could be a preferred risk policy. Now that's great because eventually, remember our firms, flood insurance rate maps are a snapshot of time, and over time things can change. And unfortunately, more than likely, the floodplains expand because the water simply has no place to go. Well, if they had a PRP before that and then expands, that could be grandfathered in. Now, look at the Code of Federal Regulations does not allow PRPs in floodplains, but there are newly mapped procedure rating that can be added onto that. And what that basically does is it limits the increase, the annual incremental increase that is experienced when you're transitioning from a PRP to a standard flood insurance policy. If you come in full risk rate, that glide path will be drastically higher than if you come in with an existing policy already in place. It also tells you, the declaration page will tell you if it's a group flood insurance policy, if it's a PRP, if it's a standard flood insurance policy. All those are really important because it will give you the rating mechanism on there. And that could be a valuable commodity to anyone willing or looking to sell, because they could assign these existing policies over to the new owner, giving them the same benefits that the original owner enjoyed over the last several years. So all that is on the declaration page. So it's just a wealth of information. So if you're buying or selling, declaration page should be part of the paperwork that is being asked for. Okay, 16, we're back on the structures. Does a seller have a flood elevation certificate, and will that will be shared with the buyer? This is important. Most people don't understand the importance of an elevation certificate. The elevation certificate does so much more than tells you. It confirms your flood zone, right? It gives you a BFE if detailed information is available. And more importantly, it provides ground truth compared to the house, such as the lowest adjacent grade, highest adjacent grade, the machinery, the height of the first floor. All that is on the elevation certificate. Wealth of information that a homeowner will eventually need. But the thing to remember is that an elevation certificate must most likely, I'm sorry, I just got a window popped up. Got a force update starting in an hour. It's gonna be rush me. Like our firms, right? The ground truth changes. So when our firms are given to a community, right after our mappers are done with it, right? The first set of development, in actuality, can make those firms kind of obsolete. It takes a lot of development to make it completely obsolete. But with an elevation certificate that's 10, 15, 20 years old, a lot of ground truth may have changed. So I recommend that people who have an older elevation certificate like that, especially if maps have changed and there's detailed information now available, they get updated ECs, right? But the EC is an important document. And under risk rating 2.0, I can say that the requirement for elevation certificates are going away, but in the insurance world, elevation is still king. So an elevation certificate can still save you money if it shows that your lowest floor elevation is 1, 2, 3 feet above the base flood elevation. And that is why the EC is so important. It can save money. Now, going the opposite way, new information, new ways of determining base flood elevations, we're getting better at it. It can go the other way. We can show that there's a negative, but that just shows the importance that this house is at a higher risk, and mitigation should be a consideration for that homeowner, either by elevation. They can, other aspects they can move. I know people don't want to get up their houses, but if you are below BFE, you're going to flood, especially in Louisiana. That's just something to keep in mind. Elevation certificate is really important. Next slide, please. Okay. Was seller and or previous owner a recipient of the following? The Road Home Grant Program was a state administered program, so that's something to keep in mind. FEMA money and Small Business Administration money. Any other type of federal disasters. Well, we've keep talking about the obligation to obtain and maintain, because the repetitive nature of this should tell you the importance of this. It is something that you don't want to apply for disaster assistance and be denied simply because someone was not told of the obligation to obtain and maintain. Now, the circumstances behind this as well is that the requirement for flood insurance only equals the amount of the disaster assistance that was given. So it doesn't make sense just to buy a policy for $6,000, but get it for $20,000, $30,000, $40,000, and you meet that obligation to obtain. You could be eligible for additional disaster assistance at the same time, receive a flood insurance claim to help you rebuild. Just so important, and once again, the thing to remember is this does not go away simply because the owners sell the property. It has to be articulated from the current homeowner to the new homeowner that the obligation to obtain and maintain is real and it has to be adhered to.
Thanks, Gil. Yeah, and someone asked earlier, does this obtain and maintain requirement only apply to FEMA assistance? And so no, and this question is getting at that in a way, it's asking for that seller to disclose what other federal dollars have they received. So for example, with those FEMA dollars, you would want to be adding up, have you had FEMA disaster assistance? So like your repair and replacement, if you're a homeowner or renter, or have you been part of a FEMA mitigation grant for things like elevation or mitigation reconstruction? So you would add those dollar amounts together, that would go here. So again, disclosure is very important. Finding out from that person who received the assistance is important. Using things like the addendum is important. For the disaster assistance specifically, only that applicant who received the assistance can call up FEMA and say, hey, I know I received assistance. I can't remember what that amount was. They will be able to tell that applicant. Now, when we're talking about things like FEMA mitigation dollars, again, they can call FEMA and ask, but one additional step that they could take is call that local community. And even a buyer could call the local community and say, hey, this structure I'm looking at, was this part of a mitigation grant? Because for FEMA's mitigation grants, at least, homeowners don't apply directly to FEMA to get, acquisition, elevation. They actually, their community applies to the state through the state to FEMA. So you can take that extra step of asking the local community, was this address involved in a mitigation grant? And again, like I think it was Lori recommended earlier, ask that local floodplain administrator or that local point of contact, hey, I'm looking at buying a house. Here's the address or the neighborhood. Are you aware of past flooding in that area? Those are going to give you some types of idea at least. Is this in a high risk flood area? Oh, you're telling me it flooded in 2016. I know there was federal disaster assistance for that one. You can probably assume that that structure has this requirement. And so question 45 goes on. If you had marked yes to any of those types of federal disaster assistance, it's asking you to give more information. So I highlighted here with the red rectangle, the part about elevation grants, because FEMA does have hazard mitigation assistance grants for things like elevation. So, I understand, in your shoes, it can be very complicated. What federal agency gave this assistance? Even within that federal agency, what program was it? Because each agency, each program that either a grant or a loan was under might have different requirements for getting and keeping flood insurance and when that requirement might be lifted. So just a few things on the FEMA mitigation grant side. One positive thing is that that requirement to obtain and maintain flood insurance, it must be recorded on the deed for these FEMA mitigation grants. So that's an excellent thing. So definitely read through that, title search. This should be recorded on the deed. Now, occasionally, these grants can take multiple years to complete. So, it kind of depends on when in the process is this home being sold in the middle of a process, but this should be recorded on the deed, which is a really good thing. And then for FEMA's flood mitigation assistance grants, now these are a specific type of mitigation grant, and it's only available to NFIP policyholders. The NFIP is trying to cut down on repeat losses or high risk homes that are NFIP insured. Because those homes have an insurance requirement anyway to get the flood mitigation assistance grants, they do have a requirement to keep flood insurance even if they are in a zone X. So that's something additional, because when we're looking at this miscellaneous section, question 45, you might want to see, okay, did the person get federal assistance? And you might want to go back and look at the question, all right, what flood zone is this structure in? Because typically we're saying, hey, it's a high risk zone, federal disaster assistance, it probably has this obtain and maintain requirement. But as you can see, there would be certain circumstances if someone's received a mitigation grant like elevation for flood mitigation assistance, that they could even have to get and keep flood insurance in the lower risk zone, the zone X. Something like FEMA's hazard mitigation grant program, which is our post-disaster grant, pretty clear cut. As long as the structure is in the high risk flood area, you're going to have to get and keep flood insurance for the amount of that, either the full amount of that elevation or that mitigation, or the limit of what Nfip can insure for that property. So for a residential structure, that's up to $250,000. For non-residential, that's up to $500,000 for the structure. And I will move it on to Gail, and I'm going to read the question that just came in the chat as well.
Okay, so tips for buyers and sellers. Okay, so for the buyers part of it, flooding can happen anywhere. Get flood insurance. I normally ask a question. I guess I can do it here. Out of our group and moderators, you can help me look in them. How many of you live in a floodplain? Raise your hand if you live in a floodplain. I can't see it. A lot of cameras are off. It's okay. Well, the answer to this is everyone's hand should be raised because the entire country is a floodplain. It's just a question of what risk do you live in, okay? So having flood insurance, and we have seen my very first disaster in Oklahoma in 2015, 65% of structures outside of the FEMA identified special flood hazard area were in a day with floodwaters. So it's not anything new. It's been ongoing. So flooding can happen anywhere. Get flood insurance, get the amount of coverage you could afford. If you can't do statutory limits of 250,000 building, 100,000 content, buy what you can afford. If you can't afford the content, still maintain some type of coverage to help you rebuild the house. Do your own research. Flood risk information is out there. Ask questions of your local floodplain administrators, your local officials. Because of privacy issues, we cannot share specific information with potential buyers. We cannot give them the flood loss history reports. We can't tell them if they were previous owners received disaster assistance. It has to be done on their own, so they can research this. Ask questions of locals. They can tell you, maybe not specifically on this house, but generalized. Yes, this area has been prone to flooding. We have seen houses in this area hit 2-3 feet water above their drywall. Yeah. Ask those questions, really imperative. Request a seller's elevation certificate. Remember, the elevation certificate is important. It has so much more information on there than just the base flood elevation and the flood zone. A lot of good information, but also remember that if it's an outdated elevation certificate, that the ground truth could have changed. I'm not saying it has, but information on the ground, comparing it to the elevation, the heights, the detailed ways that BFEs are now extrapolated, can have changed, and a new elevation certificate could show a difference. Inquire with the seller about previous flooding and require flood loss history. If the seller is not willing to provide a flood loss history, I would be suspect. I would be very suspect, because they can initiate the flood loss history report to be sent to them again for free, and they're already provided one upon the renewal every year. So that would tell me there's a reason why they wouldn't want to share that. And once again, that would make me suspect of that sale. Know the waiting period before the policy will take effect. For your new clients who are not doing an assigned rollover, for example, if they're not taking advantage of the ability to roll over an existing flood insurance policy and they want to buy their own policy, there are some exemptions like closing. You can close and get flood insurance that same day, but average waiting period is 30 days for a new flood insurance policy. Unfortunately, we learned the lesson the hard way back in the 80s, Midwest flooding. We didn't have a waiting period, and Mississippi was flooding up north and it was coming down south. And everyone down south had enough time to call and buy a flood insurance policy, and within a week they were flooded. They had the coverage, so we paid out, but now we have 30 days. Now sellers, If you're receiving a subsidized rate, transfer it to the new buyer. Use that as a leverage. Tell them that you can transfer the existing affordable flood insurance policy over. Don't forget, if there's a break in coverage, they lose any type of grandfathering, and they could be brought in at full risk rate. So they can see a substantial jump in the flood insurance costs. And I have seen this sabotage a lot of closing. People, I don't know what it is about some of the younger generations. They just don't want anything to do with previous owners. And in some cases that may be good, but in the cases where it's the flood insurance policy can be rolled over and transferred to the new owner, that's a great product. It's a great product that we provide, and people need to take advantage of it. Consider mitigation projects that will reduce the flood risk. I have a slide. I have a beautiful slide deck on this that shows the air conditioner units outside elevated on wooden, very sturdy wooden platforms that have been strapped down to resist lateral movement, collapse, or flotation. That type of mitigation project can save your clients money. It can help lower flood insurance costs. It can help them rebuild faster, and more importantly, keep them off that repetitive loss list by not having to file claims on machinery that is protected. Provide an elevation certificate. As the buyer and as real estate professionals now, you can advise them, say, you know, if the ground truth hasn't changed, maps haven't changed a whole lot, yeah, elevation certificate, you know, just whatever they have on file can be used to entice potential buyers. But having an updated elevation certificate is the way to go. I know there's a cost associated with having ECs completed, and there's no way around it, but the ground truth is important for new owners to understand. And disclose flood loss history and the flood loss information. As a seller, if the house is flooded, you need to inform new owners. Now, the flood loss history report looks like this. If there has been flood insurance on this property but no claims, it will simply say no losses on file. If there are losses, it will have the year of the loss, the amount of the loss, and that is it. It will separate it by building content. But that's all we'll have. But it's very informative, especially when you have people who think there's only been one claim. They're told one claim, but when they get a flood loss history report, their previous owner or the previous owner before that, depending on how many times this house has changed hands, could have a claim each. Jumping that up to 4 claims. Well, 4 claims, a repetitive loss, possibly a repetitive loss if they're within a 10-year window. So that changes things drastically. That affordable flood insurance may cost them a lot more than they thought. And if they didn't calculate that until their budget, you know, once again, it could sabotage the closing. Okay. So the flood loss history report, go back one second, Rebecca, I'm sorry. Only the current homeowner can request this. Now, the phone number is to start the process. They call that phone number, and the operator is going to send them an affidavit by mail. They got to sign this affidavit verifying that they are the current homeowner. They're going to send that back in. We're going to verify that. And a couple weeks later, we're going to send them the paper report that you see right there in front of you. If they do have losses, it will be annotated on there. But only the homeowner can do it. So that's something you may want them to start right away. And remember, if they have a current flood insurance policy, they should have a flood loss history report from the last time of a renewal. But if not, they can call that number and initiate it again. Thank you, Rebecca. And now back to Rebecca.
Thanks, Gil. So we do have a bunch of resources listed for you here. And as someone asked, you know, hey, is this presentation, are these materials available? Thank you so much. Louisiana Realtors has posted a PDF of this presentation at that same registration site, which is in the chat. So you'll see a PDF of the presentation, and they are also putting a link to the whole recording for this on that same site as well. So thank you so much. Again, here's just some resources. If you haven't checked out that brochure, flood insurance requirements for recipients of federal disaster assistance, that's an easy to read brochure. It's something you could also pass to your clients. Gil talked about substantial damage. What was that? You know, read the, it's a pretty quick brochure that will give you more information. There is a number listed here, 877 FEMA MAP. This is an awesome number. So this was the number where we said, hey, you can have the owner call to request their NFIP flood loss history, but you can use this number and you can also give this to your clients. So what can this call number do? They can help you understand the flood maps. If you have them pulled up, and you're like, I don't really understand the shading or the color, you know, I don't understand what zone this structure is in, they can walk you through the flood maps. They can answer general flood insurance questions. Sometimes people have questions about when the maps change or an actual change that has happened to the map. Call this number. It's awesome. 877 FEMA MAP. And there's just a few more resources listed here. Pam's resources with LADOTD. She has a contact list where you can go and type in your parish, your community, and see who is that local floodplain administrator. Let me give them a call. Let me introduce myself and ask some questions about flood zones, flood risk, past flooding, or those floodplain management requirements. And then there are also some Louisiana REALTORS sites listed here. Awesome information that's been provided in the past on the obtain and maintain requirement. And we did put the dates because some of the information does change. Things like the max amount of federal disaster assistance that's available, that changes based on fiscal years. So we have our contact information listed here, and we are, of course, right at time. If we have any other questions that came in, we can answer those, but we do understand we're right at the 1 hour mark if people need to drop off. But to our participants, thank you so much. There were great questions and comments that came into the chat. I did want to audible one of the questions. So just know that, you know, flood insurance is kind of a separate thing. I can get flood insurance on a structure that didn't even potentially doesn't even meet floodplain management requirements in my community. I can insure a non-compliant structure. I can get flood insurance no matter if the prior owner didn't have flood insurance, no matter if the prior owner got disaster assistance, didn't get disaster assistance. So flood insurance is separate. You can always call to get that Nfip flood insurance. That disaster assistance, again, it potentially can be limited based on whether that owner gets and keeps flood insurance. So they are two separate things. Did other speakers, did you see other questions come into the chat?
I'm going through there now, Rebecca. I am seeing some questions. One of the questions, if you're in a zone X and had assistance in 2016, will you keep flood insurance forever? It's the requirement from the disaster assistance. So the obligation to obtain and maintain is going to be there.
So that does, I think I answered that one in the chat, Gil. So, you know,
okay.
when do change, if you're not in that, if your structure is not seen as in that high risk area anymore, then that requirement is lifted when we're talking about like FEMA's individual assistance dollars to you. So, you know, in many ways you can think about high risk flood area. This requirement's probably going to be more likely with past disaster assistance, other types of federal disaster assistance. And just one takeaway that we want everyone to know is, you know, whether it can be hard trying to think about, hey, does this structure have this requirement? What's the requirement? Bottom line, again, in the high risk area, all of your clients should be getting flood insurance. It's needed. Disaster assistance isn't always available, even when it is. Those amounts are not, they're not like insurance. They're not able to get you back to your pre-disaster condition. And even in our, you know, lower risk zones, like those zones X, sometimes, you know, we hear people say, I'm not in a flood zone. We're all in the flood zone, you know, as some of you guys said in the chat, and we do recommend flood insurance in all of those zones. Do we have any other comments from our presenters?
It looks like you answered this one on the chat, but I thought it was worth clarifying, which is that failure to obtain and maintain by a seller, or failure of the seller to notify the buyer, doesn't necessarily affect the buyer's ability to purchase flood insurance. What it does is affects the buyer's ability to get FEMA assistance if it fails to obtain and maintain that insurance. So it doesn't foreclose the buyer's ability to get insurance through NFIP. In fact, I think FEMA would welcome the buyer's purchase of NFIP insurance.
You're absolutely right. And let me just touch on one thing Rebecca said. Under the NFIP, we're required to insure any structure. Okay, as long as it meets the definition of structure, which is two rigid walls and a roof, we can insure it. But the thing to remember is it's going to be based off of the insurance variables required for that structure. So even though we can insure it, if it has multiple claims, it has flooded multiple times, it's going to be reflective in the premium of that risk. So that's where it's important that we talk about mitigation and understanding why is it so important to talk about if a house flooded 3-4 times? Because more likely it's going to flood again and the insurance are going to increase. In the NFIP, you get kind of one freebie. Okay, one event happens, your premiums are not going to be adjusted outside. They're going to get the regular increase that every policy gets, but there won't be any additional increase. Now, once you hit twice, you're no longer eligible for a preferred risk policy. If you're in X zone, you're going to get transitioned to a standard flood insurance policy, and it's going to be the same. You're going to get to the point of maybe even hitting a repetitive loss due to the valuation of the home versus the amount of claims paid out. And it's going to be reflective in the premium. So even though we insure anything, just remember, it's going to be, the premium is going to reflect the risk of that structure.
Thank you, Gil. Super important. You know, the most high risk houses, the houses where flood insurance is the most expensive, in most cases, those structures need to be mitigated, whether that's elevated, some other means to make them more safe. So people are more safe and their properties more safe. So I just want to wrap up with saying thank you so much. You guys help us spread that flood risk, flood insurance, disaster recovery message. So what you guys do is amazing work. You wear so many hats. Many of you are active on social. So there's a lot of resources you can access at agents.floodsmart.gov to help promote flood insurance, flood risk awareness. So thank you so much. And again, you can find all of the resources from today's presentation on that Louisiana Realtors Flood Risk Recovery Series. Angela, do you have any final comments?
Not. Thank you so much for presenting the information. We truly appreciate it. Thanks to all the attendees. We hope this has been very informative and we look forward to seeing you on the next session. Have a good day.
Thank you, everyone.
Thank you.